President of Asian Finance Association, Professor Robin K. Chow, founding editor of Pacific Basin Finance Journal, University of Hawaii, Professor Gonri, Chair of Advisory Board, Indonesian Finance Association, Professor Eduardus Tandelilin, President of Indonesian Finance Association, Professor Irwan Adi Ekaputra, Board of Indonesian Finance Association, Board of Commissioners and Directors of Self-Regulatory Organization, stakeholders in the capital market, and all of the invited deans, lecturers, students, and academics. We are very much delighted to be here again today to continue with our conference today. We still have parallel sessions until 5 p.m. Indonesian time today. And to start the day, we will have the president of Asian Finance Association, Professor Robin K. Chow, to present the national culture and the asset growth effect, insights from the overinvestment hypothesis. So please welcome the moderator for the session, lecturer of Universitas Gajah Mada, Mr. John Edi Junarsin, PhD. The time is yours.
Thank you, Santiana. Good morning, ladies and gentlemen. Nice to see you again on the second day of the conference. And it's already the association annual conference. uh, it's just so unfortunate that this year we could not meet in person because of the pandemic. But we have seen that the enthusiasm, the interest, and also the research atmosphere do not dissipate at all. That's I think the positive things that we could see and experience this year. So good morning again to our guest speakers, distinguished speakers, Professor Robin Chow, Professor Gonbi, Mr. Inarno, the President Director of Indonesian Stock Exchange, Professor Irwan Adi Ekaputra, the Chair of the Indonesian Finance Association, Professor Edward Tandelilin, the Chair of Advisory Board of the Indonesian Finance Association. So as mentioned by Tantiana, today we have the President of the Asian Finance Association, Professor Robin Chow, and in a little while we'll see his presentation and also explanations about his latest research. I think co-authored by also Professor Gonri. So without further ado, I'll read quickly Professor Robin Chow's resume, the brief resume. He's the president of Asian Finance Association. He's now the professor and also vice dean of the Department of Finance at the National Cheng Chi University in Taiwan. He's also in the editorial board of the Journal of Futures Markets, and his research interests are corporate finance or financial management, market microstructure, and behavioral finance. And today, he's going to deliver a presentation on the national culture and the asset growth effect, the overinvestment hypothesis. So, yeah, I hope you enjoy today's session. And at the end of his presentation, you could write down your questions, or I think that's the best way. You could chat room, and I'll try to select some um, most relevant questions, considering that we have limited time as well. But if we have extended time later, then we hope to accommodate as many questions as possible. So yeah, again, I will hand in the time to Professor Robin Chow. Enjoy. Thank you.
Thank you. So let me share my slides.
Mhm.
So can everyone see my slide?
Yes.
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 Okay. Good.
Yes.
Thank you, John, so much for the kind introduction, and I'm really honored to be invited by Professor Ewan Ekaputra and Professor Ted Leading to this to be plenary speaker of this conference. So this is a joint work with Professor Gong Ri, who also had another presentation yesterday, And the other co-author is my student who's currently a professor in National Chinyang University in Taiwan. So let's start with the title of the paper and I'll give you a rough idea about what we're trying to figure out in this paper. So we tried to test the asset growth effect in an international setting. And why is this interesting? Because the literature has found that the amount of investment is actually negatively related to future stock returns. And when this is first discovered, it's somewhat surprising because we would usually expect that firms to invest when the future prospects are good. So the investment, intuitively, the investment should be positively related to future returns. But this is not what found in the US. And later on, scholars have tried to expand the research scope to an international setting to see whether this so-called asset growth anomaly or asset growth effect is a universal phenomenon across countries. And the answer is yes. For most of the countries around the world, the corporate current investment is negatively related to their future returns. So there have been various explanations and hypotheses trying to figure out why this is the case. In this paper, we bring in national culture, which is personally I believe is an interesting topic because we know that cultures are vastly different among different countries. And there have also been research and papers on talking about how national culture will invest corporate investment, financing, and dividend decisions, as well as how national cultures will affect individual investment behavior. So this is more of like a paper originating from behavioral finance perspective and try to propose that the national culture, certain aspects of national cultures would affect the asset growth effect and through the over-investment hypothesis. I'll explain about the over-investment hypothesis in detail in a few minutes. So let me start by talking a little bit about the asset growth effect. So as I said, it has been documented there is a significant negative corporate investment return relation. And initially, this is quite surprising. As I say, people tend to believe that a corporate invests in good times and the future returns should be positive. And this is first discovered by Baker, Stan, and Wugler in 2003 from the US data. And later on, scholars try to propose hypotheses or explanations, try to figure out why this is the case with the US data. And recently, some other scholars, they expand the research scope to international settings or international data, and they found that the asset growth effect is also significant across different countries. And in this paper, we are a little bit hesitant to use the asset growth phenomenon anomaly, because there is argument in the literature, talking about whether this effect, asset growth effect, is rational or irrational. So we try to avoid the use of anomaly.